Hello and welcome to Compass Global Markets Weekly Update. I'm Tony Boyajian. Well, the Aussie dollar and the euro both reached fresh 2.5-year highs against a weakening US dollar before retracing lower after Hurricane Irma was downgraded to a Category 1 storm. We've seen Hurricanes Harvey and Irma cause widespread damage in Texas, Louisiana and Florida, with a massive economic cost estimated at 1.5% of US GDP, somewhere around $290 billion. Now, the US dollar index is down 2% over the past month as further interest rate hikes by the US Federal Reserve seem to be on the outer. President Trump has backed a deal with the Democrats to attach hurricane relief funds, with the debt ceiling being extended until December this year. Now, low inflation in the US is discouraging the Federal Reserve members from raising rates again this year, hence the reason why we've seen a weakening US dollar. Better than expected Chinese inflation figures over the weekend has helped drive demand for the Aussie dollar. We saw Chinese CPI rise from 1.4 to 1.8% per annum, and that's helping demand for Aussie China proxy Aussie dollar assets. Now, the Aussie dollar itself remains in a 78.5, 81.5 US cent range short term. There is this continuing disparity between consumer and business confidence, which is driving financial markets now to be more focused on the employment picture. We'll find out about that on Thursday when the jobs report for September is released. Now, if we see this trend for a lower paying job scenario continuing, it could see the Australian dollar come under further downside pressure. We still have this high debt, low wage story. It looks like the Reserve Bank of Australia wants to see evidence of wage growth before they can even consider raising interest rates again in Australia. The Chinese yuan is up 7.5% against the US dollar this year. It looks like the People's Bank of China are concerned about this abrupt strengthening of the yuan. They've meanwhile abolished the 20% reserve requirement for onshore yuan trades and also for yuan deposits to try and curb the strength of the Chinese currency. We know that China and USA have got a number of important data figures coming out this week. Retail spending and industrial production figures out Thursday and Friday this week. Meanwhile, in the US, inflation data is out Wednesday and Thursday this week, so certainly a focus for the market. If we take our attention to Europe, the ECB meeting last Thursday confirmed no change to official interest rates. It looks like the QE decisions were likely to take place in October after the German elections on the 24th of this month. Any tapering plans for QE by the ECB likely won't happen until early 2018, and if that occurs, it will likely lift the euro dollar higher. ECB board member Benoit Kerr this morning warned that a higher euro could drag down inflation. So we've seen a bit of a pullback in the euro on the back of those comments. Meanwhile, the sterling pound has strengthened to 12-month highs. We've got UK CPI inflation data out tonight. If it's as strong as the market expects, around 2.8%, then the Bank of England may consider unwinding that emergency rate cut of 0.25% they instigated in June 2016 when the Brexit referendum was passed. Elsewhere, gold remains firm. We've seen gold rise as a safe haven asset for investors by 12.5% this year. This month alone, it's rallied by 6%. And if we see continuing tensions in the Korean Peninsula and further reduced expectations of US rate hikes this year, then gold will continue to be well sought after on the dips. Don't forget to watch Sky News Business every Thursday lunchtime from 12:15 p.m. for Compass Global Markets weekly financial markets wrap. Thanks for watching. Have a great week. I'm Tony Boyajian.